Dale again, and let's continue on with our series on how I trade. This is video number 3. And what I'm going to show you here is why I use the Standard & Poor's 500 ETF SPY to trade. And then the results from last March. I want to show you the results at a couple different trade levels. I want you to understand that this was an extremely difficult time in the market for a lot of people because it was very volatile. It was going up and down quite a bit, and but we profited handsomely. So I want to show you these results. So the first thing I want to do is just go back over to Thinkorswim and talk to you a little bit about why I use the SPY ETF as my trading vehicle. The first thing is there are no earnings with the SPY. You've got a diverse portfolio of 500 stocks, so you're getting everything you need as far as the portfolio is concerned. And if you look at the open interest here, that's the number of contracts there are being traded. And you can see that on SPY, there's a lot of interest. People, institutions, individuals are trading the heck out of this thing. And that's good for us because that gives us an ETF, an option on an ETF to get in and get out quickly and not, you know, have the floor traders move you away from what you put your trade in at. The other nice thing about the SPY is you'll see the difference between the bid and the ask here. In most cases, there's only a penny or two. You know, here's 3 pennies, 2 pennies, 2 pennies, 2 pennies. That's a very tight bid ask. So you're not going to get a lot of bad fills. You're going to get quick fills and you're going to get good fills when you're trading the SPY option. Now, let me just show you a couple of other popular stocks or ETFs. Let's take a look at the RUT for an example. And let's scroll down here and take a look at the RUT. And you can see that it's not traded too heavily. And here, all of a sudden, look, you've got a 60-cent difference, and these are more expensive. So this is not a vehicle to trade with options when we want a good fill and we want to get in and we want to get out quickly. Take a look at AutoZone. AutoZone is a big stock. It's fairly popular. Let's see how much, what kind of open interest we have on AutoZone. And not too much, do we? Not too much. You don't want to get in here with a 10 contract lot and with a $7 spread between the bid and the ask, asking the floor trader to give you the midpoint. He's going to laugh at you and you're going to get an extremely bad fill. This is not the kind of stock you want to trade options with. The other one we want to take a look at is Apple. Now, Apple is a very popular stock. It's traded heavily on the big institutions, and it has a lot of play. So let's take a peek at Apple real quick here. Apple has no options. Yeah, sure it does. Okay, so it's not going to show me this right now. I don't know why, but let me just go back real quick here and see if I can redo this. Okay, so we've got that. Wonder why AAPL. There we go. There we go. Okay. So you can see that Apple is very popular, extremely high volumes, but it tends to not be as tight as the bid ask. as the SPY. So when you put that all together, I love the SPY to trade. And to be quite honest with you, you really don't need many more. I mean, the SPY is going to give you all the diversification you need. If you focus on one stock, you're going to be so familiar with the chart patterns and so forth. It's going to be to your advantage to just focus on the one, and that's why I do that during this presentation. Okay, so let's go back to the beginning here. And what I want to show you, let me see if I can bring this up. I want to show you the actual trades on the chart, and what I've got here is the SPY, and this goes all the way back to March of last year. And then what I've got here is 360 days or 1 year's worth of 1 hour charts. Just to show you in a little bit more detail how accurate this is. So we'll take a look at the first trade that we had, and you see that SPY came up, then pulled back. Okay, this is the higher low. Then it made a measured move right here, and there's the 127. That move right there, if you had just 3 contracts or you investing about $500, you would have made 1932. That happens a lot. It happens a lot. Now this next one is interesting, because then we had a small measured move right here, and we got in and quickly got out. This was actually a losing trade. We got out losing $105 on a $500 investment. $105. So very little controlled losses, if you will, when we do have a loss. Okay, and then you had another measured move right here that went from here to the 127. You know, sometimes you have to let it go through some gyrations before it gets there, 1 or 2 cycles. Here's another measured move here that we got in, and there it is. Now, this one didn't occur until about 2 months later. So these are all calls. And then along comes the market, and it takes a dip, and we dip right along with it with a put. And we had a nice little put right there. And then it reverts back, and we had a nice little call. Okay, so you can see how this works. And I'm going to show you later on how to automate this a little bit, semi-automate it, so you don't have to sit there and watch it all the time. But I mean, you can just visually see how accurate this is. Here's a measured move, and here's the 127. I mean, sometimes it hits that 127 within a tick, and it's like, wait a second, how does this happen? Well, remember what I was telling you about the Fibonacci's, and how the Fibonacci's, you know, are in harmony with nature, and of course you can see it all the time here. And I request that everybody try measured moves, they try Fibonacci's, to show, you know, to get really familiar with these and show yourself how accurate these can be. I mean, when I first learned this, 30 plus years ago, I guess, I spent hours and hours and hours learning how to do this, and I was amazed at how accurate and how better my trading got, because there is no tomorrow newspaper that tells me what it's going to do, but the combination of the regression channel and the measured moves and the Fibonacci's gets pretty close to showing you what you ought to do. Here's another one that came down. Here's the measured move right here. There's the 127. You know, so a lot of times we leave money on the table. That's good. I'm grabbing it right out of the middle when I've got the edge, and then right away it reverts back, and we grabbed it right here. then it reverts back again, and we grabbed right here. So we went from a put to a call to a put, and then right back to a call, and then right back to a put. Okay. And a lot of people complain about whipsawing in the market, and the market does whipsaw, especially this last year. This last year with everything that's been going on with Russia invading Ukraine and the coronavirus scare. I mean, it seems like there's another strain coming out every other day that just rocks the market. And then the FOMC is starting to increase interest rates because of inflation. But interest rates are still low enough that the big institutions can't invest anywhere else because there's not a big enough return. So their money's still in the stock market. But that doesn't mean that when some news comes out, the market will get rocked. And the interesting thing about this is when you hear news, it's already been discounted in the market. So you can't really trade on news. I don't listen to the talking heads at all. I watch the charts. The charts tell me everything I need to know. This is coming up here. It's making a measured move. It's showing some strength, and I'm capturing the profit right out of the middle here. Okay. All right. So let me actually show you some results. And let me bring over this guy here first. Okay. All right. Let's see. Let me do this right here. Yeah, this was a big one. Now, okay, this is $500 per trade, roughly $500 per trade. You can see that most of the option prices I zero in on right around $2. That seems to be the right level. And you know, with $500 per trade, you're going to get 2.5. I rounded up to 3. So this is with a very small portfolio, not risking the whole portfolio, but just putting $500 per trade on here. And you can see that from March until right now, which is we're getting into August of 2022, $500 per trade would have netted you 20,000. Let me let that sink in a little bit. $500 per trade is going to net you about 20,000. And this is not the best year I had. This was a good year. I had a good year, but these kind of results are unheard of in the stock market. And I'm about the only person that actually shows my results and shows what I do. So I think you're going to be extremely pleased with this. The one thing I would suggest is start slow. Start slow. I know you look at this and you say, "Boy, this is a trap. This is too good to be true." Yeah, it is. But if you jump in and you've got $5,000 and you put $5,000 and this is your first, let's say this is your first trade, and you lose this, it's like, geez, this doesn't work. Well, yeah, it does. And then you get one right behind it and you lose that one. You say, you're going to lose confidence. Okay. So start small, build your level up. You can increase this. I mean, and you know, at some point in time, say, hey, I've got a lot more money in my portfolio. I'm going to increase my trade size. And that's the best thing to do. As your equity curve goes up, start increasing your trade size. That's the way you start compounding your returns. Okay, I just wanted to show you the $5,000 portfolio, very small, with only $500 per trade. Let's take a quick look at. Whoops, let me see if I can. I'll just get rid of this, I guess. Sure, I want to save that. Let me bring over, and this is also pretty conservative. This one's pretty conservative. This is a $25,000 portfolio, so I'm putting in the $2,500 per trade. Now, the nice thing about options are, and a lot of people say, oh, option trading, it's really risky. If option trades are done correctly, it is the best way to trade because you can't lose any more than what you're investing. Okay, so let's take a look at this first trade. And what I'll do is I'll tell you we want to buy a 21 May 413 call approximately at this price. And that's all you have to do. If you can either do it yourself or on Thinkorswim or call your broker and say that's what you want to do. And then when it's time to exit, I will send out another alert and it'll say exit the 21 May 413 call at about this price. Okay. Now remember, this is what I'm doing. This is what I'm doing. Okay, so you look at this and you say, gee, this first trade had a tremendous return for a pretty low investment. But what I was saying is, when you get into the call option, you've bought this for $2.25, and there's 100 shares per contract. So that one contract is going to cost you $225. $225. Okay. So if you're trading one contract, the most you can lose is $225. Okay. And that's the beauty of trading options. If you've got a strategy that gets you in and gets you out quickly, and you can see that you've got the edge and it's moving in the right direction, that's how you trade options. If it goes against you, you know that the most you can lose is this. But most of the time, I get out way before I've lost that total amount. Okay. Here we lost a little bit more than half that. Okay. But not all of it. And that's the way to trade. That's the way you mitigate your risks. Okay, so let's see, what else do I want to point out here? You know, here was a pretty heavy duty loss right here. But as far as the accumulation is concerned, I mean, this just goes right along, and this is $2,500 per trade, ending the year up about $80,000. And these are actual trades. I almost hate to show these results because I don't want people to get so excited that it's like, man, I finally found the Holy Grail. I'm going to invest the house in this. And then it doesn't work out. It's like, oh, man, you got to give it some time. There will be losers. There will be losing streaks. Okay. But on the average, year after year after year, I have about 70 to 80% winners with this strategy. Okay. Okay, let me get rid of that and let's go over to that's it for talking about the results. The next up in this How I Trade series, video number 4, I'm going to be showing you exactly how to execute the trade, what you're looking for, how you execute it, how you go on to Thinkorswim, and step by step how you put the trade in. So we're getting down to the meat and potatoes now, and video 4, that's what we're going to start. Hope you enjoyed this video. Bye-bye now.